The broadcast is now starting. All attendees are in listen-only mode.
All right, guys, welcome to the weekly webinar. Just like every Wednesday, this is Neil Gren again with you. Just want to wait a minute for two for you guys on Facebook to join us. Okay, guys, can you hear me now? Hopefully. Okay. As I said, this is Neil Green, right? Talking to you just like every Wednesday on the weekly webinar. Hopefully you can hear me and see my screen. Just want to do a technical check, see that you can see the screen and hear my voice. So you guys on GoToWebinar, just write me down. And you guys on Facebook, you can write a comment, okay, whatever you need, all right? So write me down that you can see the screen and hear my voice so I can start. All right, anyone has any technical problem? Okay, so we good. Everybody can see the screen, can hear my voice, and we can start. Okay, so as you probably know, this is our homepage. Okay, today we have the biggest event in the market, the biggest event that can be interest rate decision, all right, followed by a press conference. We're going to talk about how to trade the interest rate, okay, how we look at it, how we analyze it. Very interesting, okay, the market these days are doing very, very interesting things. I want to show you what's going on in the market. We're going to see how the funds reserve, the Central Bank of the United States, how it's going to affect the market. First of all, this is our homepage. As you probably know, it's iTrader.com. All right, for future webinars, I'm going to be here every Wednesday at some hour. Okay, all you have to do is click on Save Me a Seat, put in your first name and last name, and you can register to the webinars. Of course, it's for free. And that's about it. Okay, so let's start. You ready? Okay. So this time we're going to talk about the biggest event of the year, the biggest event of the market, trading the rate decision. Right, interest rate decision, by just for you to know, takes time 8 times a year. Okay, 8 times a year, 4 of them followed by a press conference 30 minutes after. Now, every time that the Fed have decided to either increase or reduce, either we had a hike or a drop with interest rate, it always happened when it was followed by a press conference. Today, 30 minutes after the interest rate decision, we have a press conference. It's very important for you to remember. So trading the rate decision. The Federal Reserve rate decision will be published today at 6 o'clock GMT, right? Make sure you see what time it is at your time, okay? If it's 8 o'clock, if it's 7 o'clock, wherever you're from in Europe. Janet Yellen Janet Yellen, she's the chairwoman actually. She stands at the head of the Fed. The Fed is the central bank of the United States, as you probably know, the strongest and the biggest economy in the United States, in the world. Okay, United States of America. Everybody knows Janet Yellen. She's the head of the Fed. She has a press conference, and she's going to start at 6:30 GMT. So pay attention. Okay, the Federal Reserve rate decision will take place at 6 GMT PM. Janet Yellen press conference will start 30 minutes after that at 6:30 GMT. Now, this event considered high impact event. I would even say that the most important event in the market. There is a 99 chance that the Fed will raise its rate based on the CME group. Okay, usually they're correct. And let's see where we find it. Okay, so you can go to investing.com or Forex Factory. I put it under GMT time. Okay, you can set it to your time. 6 p.m. on GMT time. As you can see, we have the federal funds rate. Okay, right now the rate is 1%. The interest rate in the United States is 1%, and it expected. Okay, we expect it to go up for 1% by 0.25 to 1.25%. Okay, we're going to see the actual result right here. 99% we expect interest rate to go up. Okay, what does it mean about the market? We're going to talk about it right now. Okay, how it affects the market, and how can you guys take advantage of these opportunities to trade and make money. So 1%, this is the interest rate, as we said, expected to go up to 1.25%. And as you can see, 30 minutes after the interest rate decision, at 6:30 p.m., again, it's GMT time, so make sure you see what time is it at your local time, we're going to have the press conference, okay? You can watch it on Bloomberg Live, CNN, whatever, I don't know, all the financial portals or channels, okay? Janet Yellen, she's going to speak for about an hour explaining why, if it's going to go up, why she made a decision, okay, and not only she, the whole 16 members of the Fed Reserve in the United States made the decision to actually raise interest rate from 1% to 1.25 as expected, or if something else will happen. They're going to talk about the market. There's going to be a Q&A session, all right? Questions and answers. She's going to answer some questions of the press. And at this time, from 6 all the way to 7:30, 1 hour in the press conference and even after, we're going to see major volume of money coming into the market, a lot of trading opportunities, all right? The market is going to go up or down, depends on the direction, like crazy. You can take advantage exactly of that, and let's see how we trade it. So, Janet Yellen press conference will start, we said, at 6:30 GMT p.m. This event considered a high impact event. There's a 99 chance that the Fed will raise its rates. The current rate, as you saw, 1%. It is expected to rise to 1.25%. Okay, this is the forecast. We saw it already. This would be the second time for the Fed hikes in 2017. Now, I don't know if you remember, all right? We talked about it on past webinars. The Fed expected rates to go up 3 times this year because the stock market right now is so high. Actually, it's the highest point ever. Okay, so you know it's the greatest time to raise interest rate. They talked about 3 times. This would be the second one. The first hike, by the way, took place at the beginning of the year on March 16th. All right. The last time the Fed hiked more than once in the same year was in 2006. So we're talking about 11 years that the Fed didn't raise interest rate more than once a year. Now today, if interest rate as expected will go up to 1.25%, it's going to be the second in 2017, and it's only June. Right? The Fed at the beginning of the year talked about 3 hikes. Okay, it's a new world. It's a new economic world. Okay, the reason for that, I'll show you the reason. If you look at the MetaTrader and you look at all U.S. indices, okay, all the U.S. indices, take S&P 500. Here is a monthly chart. See, highest point ever. It's never, the stock market never, this is 2008, the big crash. Since then it goes up. Right? This is now June of 2017. The market was never so high, was never that high. Look at the Nasdaq. Look at the Dow Jones. All the U.S. indices. Okay, the indices that represents the stocks and the companies with the highest value in the U.S. market right now. Okay, the market is booming up. This is the best time to raise interest rate. Usually, when interest rate goes up, the currency is getting stronger, because if interest rate goes up, people would put their money in the bank on non-risk. Okay, savings. So they take the money off the stock market and currency goes up. U.S. Bank stocks are going up, and we expect the stock market to come down and the currency to get stronger. All right. Okay, we're going to talk about it right now. I just wanted to show you the indices. So this would be the second time the Fed hikes in 2017. The last time the Fed hiked more than once in the same year is 2006, as we said. So it didn't happen for 11 years, and that's a big deal. All right. Okay, can we go on? Okay, great. If you have any questions, okay, just stop me. You can write a comment on Facebook, or you guys on GoToWebinar, you have a chat window. Okay, just ask me. Okay, let's go back to the PowerPoint. Okay, because the hike itself is priced, which means right now you have to understand the whole capital market is based on expectations. So right now the market, the expectation, the forecast is already, we know it for or 3 days, okay, 3 days actually, is expected to go up to 1.25%. So the market is already priced as if the interest rate was 1.25%. So because the hike itself is priced, investor will check out futures expectations. The first is if there will be another rate hike this year. Okay, how do we know? That information will be presented at 6 p.m. GMT together with the actual decision. Okay, if you go through Forex Factory like I showed you, you can see here that at the same time, 6 p.m. we have the federal funds rate and we have the statement of the Fed. Okay, okay, so looking here, you can go here. Let me show you what happened last time. Okay, last time was last interest rate decision May 3rd. Latest release, you can go here and you can look for the dot plot if you like to see how many of the 16 members of the Fed, supposed to be here somewhere, statement, let's look for May. This was May. Let's open it. Good. Let's look for the dot plot. Actually, you're gonna hear it on the press conference. But here on the statement, all right, on the statement, if you read it, you have all the information needed for you to understand how many hikes are expected, and you can listen to Janet Yellen on Bloomberg Live or whatever financial portal you want to look at, and listen to the expectations. All right. So that information will be presented at 6 p.m. GMT time. If you missed it, 30 minutes after that, we have the press conference together with the actual decision. The second expectation has to do with the Fed's huge money base. Okay, the Fed has more than $4 trillion of bonds in its portfolio. When will they sell them back? We don't know. Okay, let's listen to the press conference 30 minutes after the interest rate decision and see and look at the reaction of the market. Now, market reaction. Market volatility has gained momentum in the past few days. Okay, if you follow the market, we had great chances. All right, great opportunities. There is movement from technology sector to the banking sector. Let me try to explain why. Think about, okay, first of all, we have the FANG stocks, which is Facebook, Amazon, Netflix, Google, and Apple. All the big technology stocks are under pressure while US bank stocks are rising. Okay, the trade-off could continue if the Fed raises expectations, which means what happens right now in the market is, let me show you on the MetaTrader, is this. Let's take a look at the stock market right now. Okay, it's going to be open in 15 minutes. Take a look. Let's take a look on Facebook. There you go. Facebook is here. I'm putting a daily chart of it. On monthly chart, you can see Facebook is going up all the time. But on daily chart, see what happens in the past 3 days ago. Okay, we received the forecast that interest rate should go up to 1.25%. Now try to understand the logic behind it. If interest rate goes up, okay, it means it's going to be more expensive to all the companies, to everyone, to take loans from the bank. If yesterday or 3 days ago I had to pay only 1% a year for my loan, right now the interest rate should be, okay, as expected, go up to 1.25%, which means loans are going to be more expensive. If loans, the FANG stocks and Apple, Facebook, Amazon, Apple, Netflix, Google, and the rest of the big technology stocks, okay, these are the biggest corporations in the United States. We're talking about companies that worth billions, hundreds of billions of dollars, okay? These guys have a lot of projects, okay? They need to finance these projects somehow. How do they finance the project? They take loans from the US banks. If interest rate is higher, okay, it means the loans that Facebook, or look at Google, same thing. You're going to see all technology stocks are looking the same. Boom, Google went down 3 days ago, okay? Let's take a look at Amazon. Same chart, boom, all right, 3 days ago. Okay, take a look at Netflix, for example. Netflix, I I don't find the stock right now, but should be down here maybe. Okay, it should be in the portfolio. Just look for it, okay? There you go, Netflix. Went down, you see? So all the big technology stocks, companies right now are going down. Why? Because if interest rate goes up, okay, it means I can put my money in the bank for non-risk. Where do I get the money from? I can sell my stocks. So people in the past 3 years are selling the technology stocks and putting the money in the banks, and they purchase, okay, US bank stocks. For example, look at all the stocks. Look at Citigroup going up. Look at JP Morgan. Look at US banks. It's crazy. Going up in the past few days. So technology stocks, because of what we talked about, are going down. Loans are more expensive. Rate is going up. It's good for the banks. They're going to sell loans. They're going to sell money for more. Okay? They're going to make more money for their loans. Goldman Sachs wasn't that high for many long time. All right. So these are the stocks, and U.S. stocks right now. U.S. bank stocks are going up, and the technology sector is falling down in the past 3 days, since we know the forecast for the interest rate. So FANG stocks and Apple are under pressure, while U.S. bank stocks are rising, as we saw. This trade-off could continue if the Fed raises expectations, as we said. Banks appreciate higher rates, but technology companies find it problematic, as we just saw. All right? Banks give out loans and make more money on higher rates. Makes sense. If interest rate will go up from 1% to 1.25 as expected, U.S. bank stocks should be stronger, as we see in the last 3 days. Okay? Technology stocks, okay, are falling down right now, are dropping. The price is dropping. Okay, and currency is getting stronger, US dollar, by the way. Technology companies desperately need money in order to finance operations. We just talked about it. Apple has dropped around 7% since Friday. FANG stocks, as I showed you, plus Apple, have lost more than $150 billion when bank stocks are rising. So we're talking, this is a big deal, guys. What I'm saying right now, it's new economic world, okay? The second time, it's the first time since 2006 that we expect interest rate to go up more than once. Okay, and if it's going to be 1.25 now, it's going to be the second time this year. And Apple dropped 7%. Take a look at Apple. Apple. Let me show you what AAA. There you go, Apple. Look at the daily chart of Apple. 7% down, okay? Because of this. Okay, let me repeat it. Apple, if interest rate goes up, okay, means Apple, first of all, people sell stocks, the big stocks, put the money in the bank, they get better rate. Second, loans are more expensive. US banks are going up, technology sector is going down, and today we're going to see if interest rate will really go up as expected to 1.25%. Okay, the currency market will also react to the rate decision. So I suggest you should diversify your portfolio, split. Don't put all the eggs in one basket, but you can take a few trades here. The commodity market, including gold and silver, should also be part of the trading portfolio, okay, when you trade. Just remember, gold and silver, the metal commodities, they work with the opposite correlation with the currency, which means US dollar goes up, usually gold goes down, and the opposite, okay? Gold and all the metal commodities and silver are the parking lot of all currencies. Usually when people get rid of US dollar, they buy gold. If interest rate goes up, it's good for the currency, okay? And for US bank stocks as well, right? Traders are recommended to prepare trading setups on all major assets. Before you trade, always remember, if you know how to combine the fundamental analysis with the technical analysis, you're great traders, all right? Go to the hourly chart, okay? Set some key levels, support and resistance lines. Try to understand what are the low and the high prices, where the market could go, so you'll know when to close your trades and take the money. Assets to trade include, of course, technology companies, as I showed you, US banks, we talked about it, US dollar and gold. And of course, good luck. Any question, guys? Anything you would like me to clarify? This is the time. I'm here for you. By By the way, thank you very much for all the emails you sent me during the week. I'm trying to reach all of you. It's pretty hard, but this webinar, by the way, is recorded. It's going to be on YouTube and it's going to be on our homepage at our Facebook homepage at itrader.com. All right. That's about it. So if you don't have any questions, I would like to thank you very much for participating. This is the biggest event, okay, of the year. Take advantage of it. 6 p.m. GMT time, interest rate decision. You can watch it again on Facebook, okay, the webinar again. I'm going to be here next Wednesday, same hour, talking about the next topic. I would love it if you can join us, as I said, through the website, itrader.com. Go down here and register. Save me a seat, it's for free. All right? Thank you very much and have a great one. Thank you for participating. Bye-bye.